the thing about hedges are 1% of your portfolio. Hedges are 5% of your portfolio. Hedges are, I like the way things are currently. It's just in case. That's not me. I don't know anybody that understands Bitcoin and owns 1% of their portfolio in it. Not a single person. If you understand Bitcoin, it's over 50% of your net worth. Easy. It's not a hedge. I'm working to revolutionize and fix the system. I'm looking to replace the money with something that works. I'm not looking to hedge the money.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
Where I said Bitcoin's not a hedge, it's a solution. You see, gold is a hedge, Bitcoin's a solution. So why is gold leading? Why is gold repricing now? Because everyone's cracking the window. Trump has not got his new Fed chair. We have not officially started QE. We're in this weird era right now where they're trying to paper over the volatility and keep things calm. We haven't seen the liquidity. We haven't seen the reindustrialization yet. And Bitcoin's just telling us the truth, you see? But don't make no mistake, windows are cracked. The house is burning down. The roof is on fire. All windows are cracked. So this from Luke, central banks are buying gold aggressively. The price of gold is the whole point, as noted by former IMF chief economist Ken Rogoff when he advocated in 2016 that global central banks shift from US dollars to gold, because unlike US treasuries, gold has no limit on its price. Now, he screenshotted Ken from the IMF, so I want to read it and then give some commentary. Ken wrote, "I am just proposing that emerging markets shift a significant share of the trillions of dollars in foreign currency reserves that they hold now. China alone officially has reserves of 3.3 trillion into gold. Why would the system work better with a larger share of gold reserves? Well, the problem with the status quo is that emerging markets as a group are competing for rich country bonds, which is helping drive down the interest rate they receive. With interest rates stuck near zero, rich country bond prices cannot drop much more than they already have, while the supply of advanced country debt is limited to tax capacity and risk tolerance. Gold, despite being in nearly fixed supply, does not have this problem because there is no limit on its price." That's the big idea. There is no limit on its price. Sovereign debt has a limit on its price. Governments can't afford for these things to be volatile because implied in the debt is how much it costs. If everyone started dumping US bonds, we've talked about it on the show, the government would do yield curve control because they can't afford for yields to go to 10, 20, 30%. They can't afford that shit. Guys, Trump is begging and pleading to get a new Fed chair in because he can't even afford the 3 and some change. Our interest expense is like $1 trillion a year. So the point is, you need to collateralize yourself on something that's inelastic, that can go up a lot in price, meaning you can't manipulate it and you can't inflate it. Things like gold and Bitcoin. And so they're cracking the window, you see, getting some oxygen, getting some price inelasticity in this, you see? So if we go on, this is gold against the stock market, against the SPX. And this is my way of saying, you know, things like technology and stocks and Bitcoin, they are more a reflection of liquidity. The world has seen nothing ever like Bitcoin. Bitcoin is a once in a generation invention. Bitcoin is we are redefining money as we know it. Okay. So nothing is like Bitcoin is the purest expression of currency debasement. It is the thermostat or the thermometer, the thing that tells the temperature in the sauna. Okay. But if you were to say like, well, the stock market usually trades on liquidity. Okay. You know, the stock market, as I've said before, it doesn't trade on priced earnings. It doesn't trade on cash. The stock market is a Ponzi retirement account for the United States, right? And so when you look and you see gold destroying the stock market, this again tells me that the liquidity isn't here. The AI deflation, the Bitcoin deflation, the internet deflation, ramming its head into the fiat inflation hasn't yet resolved itself. And so while it's on fire and things are starting to burn down, windows are being cracked. Things are being repriced in gold terms. So I thought this tweet was like kind of a nice way to contextualize it. Like, this is Bitcoin over total US debt. And this is a good way, in my opinion, to really visualize that, like, it's working, but it kind of ebbs and flows. Because again, Bitcoin is not a hedge, it's a solution. Bitcoin is not cracking the window. Bitcoin is measuring the temperature. Bitcoin matters most when we either have to fix the HVAC, which is pay off the $38 trillion, or evacuate the house. That's when Bitcoin matters the most. And it depends, what do you want to own? You want a hedge? Sure, you could take a hedge. Go ahead, hedge. Hedges are, the thing about hedges are 1% of your portfolio. Hedges are 5% of your portfolio. Hedges are, I like the way things are currently. It's just in case. That's not me. I don't know anybody that understands Bitcoin and owns 1% of their portfolio in it. Not a single person. If you understand Bitcoin, it's over 50% of your net worth. Easy. It's not a hedge. I'm working to revolutionize and fix the system. I'm looking to replace the money with something that works. I'm not looking to hedge the money.
Bitcoin isn't designed to comfort holders or maintain illusions. It's designed to expose imbalance when liquidity is withheld. Bitcoin reflects that when monetary expansion accelerates, Bitcoin reflects that too. That's why Jack insists Bitcoin isn't a hedge you sprinkle into a portfolio, it's a response to a broken system. A hedge assumes the system mostly works. Bitcoin assumes it doesn't, and that distinction matters now more than ever. What Jack is really forcing us to confront is the cost of currency debasement, not just in purchasing power, but in life itself. Bad. Money distorts incentives, delays adulthood, erodes dignity, and strips people of the ability to plan a future. It affects whether families can form, whether effort feels rewarded, and whether hope remains rational when innovation should be making life cheaper and easier. But money makes it harder and more fragile.
Or when they, listen, if the house is on fire because there's no liquidity and an inflationary system is getting its kicked by deflationary technology, when they start printing a lot of money and the temperature cools off, close the window. So where's the volatility actually realizing itself? There's been a lot of talk of Minnesota recently. Not going to really get into that. But this was posted by the Minnesota Department of Health. Suicide. Title of this is Suicide Holds Steady in 2024. Suicide looks like gold. Consistent, unapologetic, year-over-year growth for suicide in the United States. So when I say the S&P 500 looks fine, markets look okay, but somehow that volatility is being realized in the streets, in the everyday person. Guys, what the f***? Like, this is not a casual stat. Like, oh yeah, I guess that makes sense. The S&P 500 keeps making all-time highs, but everyone year over year is taking their own life. What the f***? This is the rage to policymakers, to central planners. So the tweet I showed earlier from Tyler, I omitted this photo from it because I want to bring it back this episode full circle. So Tyler posted, the boomers have no idea how radicalized Gen Z has become, how radicalized the youth has become. Low implied volatility in asset prices aren't showing the vol. The volatility has been transmuted, has been transferred to the social contract, to the people, to the youth. The world is only going to get more dangerous from here. While first turning institutions, the institutions of the future, the revolutionary institutions, the strikes, the 21s, they're being built now. They won't take over power until the fourth turning institutions officially collapse. A lot of instability is on the way, but that doesn't necessarily mean the government won't paper over the assets. And he adds to it a TikTok, a viral TikTok, where the text on the screen says, here's a funny prank idea. Make people study for 16 years while putting them into extreme debt only to replace them with AI. This is how radicalized the youth has become. Make us go into extreme debt to ever, if we want, get an education, which requires us to get employed. Oh, you want to be a lawyer? You want to be a doctor? You got to go to school for 10 years. And you can't afford that. So you're borrowing from your future to get it. So you're going to have to study for 90% of your current life, only for us to say you don't get a job anymore because AI is doing your job. So you're never going to get the job you want. You're never going to have the family you want. You're never going to afford a home. You're never going to get a car.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.